It is the nature of human beings to want to get instant results in almost everything. And it is this nature that no doubt gives the allure to day trading. It looks like a great easy way to make a quick buck, or quid as they would say in England. We often want to make a quick return or a quick easy profit with little work. But making a profit from day trading is difficult, and while every day trader claims they can earn money, the majority of people who try day trading end up with a net loss. However, you can increase your chances of being profitable when day trading by knowing the dangers that can lead to losses, and also by getting realistic about the misconception that day trading is simple. So if you have thought about getting into trading, or if you are a trader and you want to increase your chances of success, then stick right to the video, as in today's video we will discuss why day trading has a high failure rate and what can be done to avoid huge losses. So if you haven't heard, day traders have a very high failure rate. Some statistics show that only 2 out of every 10 traders are going to gain some substantial profit. So why does day trading have a high failure rate? It's for a number of reasons really. Among them, the first one is that people think it's simple to do it successfully. Underestimating the process and what it takes can be financially fatal in this game. Many day traders fail to recognize that the trading industry is full of really intelligent individuals who have spent years learning the techniques and gathering the information on how to be a reliable trader. See, many failed day traders are unaware of the work, analysis, testing, and money spent to be successful. All they believe is that they need a few indicators and some money management to be living the high life in a year or two. It is possible, but it takes a lot of money and years of hard work to get there. Second reason many day traders fail is because of analysis paralysis. This occurs when you have too much information flowing, and probably more like too much of the wrong information that can hamper your decision-making process. Most daily traders want to make use of so many indicators in such a hurry that they miss the one that really works. The markets are volatile and changes happen every day, every hour, and every minute with day trading. It would be smart to develop a trading strategy, but it takes some forethought and maybe even visiting the trading forums where strategies and techniques are discussed. A third issue that arises from day trading is that a trader can place trades in the market with the sole mindset that the market is going to go up and that they will take a profit at the end of that day. They feel that the market will only go their way, and that's all that goes through their minds. All the while, they are never thinking about the exit strategy and when is the right time to get out. They don't care about any plan to exit losing trades by setting limits in the tool. In the end, more than 80% of them fail. Finally, let's talk about how to become a successful day trader and avoid failure. The main thing to focus on is to never stop learning and challenging yourself. Apart from that, there are numerous strategies for avoiding failure in day trading. Let's take a look at some. The first important thing is to research more and more. Don't sit by speculating. Remember that knowledge is power, so read as much as you can from those who are successful. Keep up on current events and how they affect the markets. Second thing is to plan your investment strategy. You must have an investment strategy and stick to it. Set aside proper times to check the markets during the day if you don't have a setup that keeps that information in front of you constantly. The third thing is to believe in yourself and your ideas. Everything is adaptable if you need to make little changes. Start out small and be realistic about the profits you will make, especially just beginning. As we said earlier, the allure of day trading is the feeling of making a lot of money instantly and very quickly, but take your time to understand what is going on and the patterns and short and long-term trends. Keep in the back of your mind that day trading has a very high failure rate and that you could become part of that 80% statistic if you're not careful. Fourth thing is to realize risk management takes time and practice. Develop yourself to where you are timing your trades well. Become proficient with the tool that you use and learn to cut your losses with placing limit orders. With limit orders, you can set the target prices, as in what exact price you'd like to buy or sell the shares. With these types of orders, you can say that if a stock falls to a certain price, then sell my shares automatically. This way you don't have to worry about taking a huge loss, and it allows you to go run errands or do other things without worrying that you may not be in front of your screen when the market decides to take a dip. Finally, never allow your emotions to govern your decisions. Emotion and day trading do not mix. Let your training and solid research be your guide. To sum up the whole discussion, trading is a profession much like being an engineer, doctor, or lawyer. It takes years of dedication and work to become an expert at it, and you must be willing to learn from your failures. The best feature about trading is that you may also use the experience of others to shorten your learning curve. Only if you can limit the percentage of trading errors will you be one step closer to achieving consistent profitability. So, what do you think is the root cause of most day traders' failures? Tell us about your thoughts in the comment section. Also, don't forget to like, share, and subscribe to our channel for more amazing updates. Thank you very much for taking the time to watch this video. See you in the next video. Until then, goodbye.